My name is Kornmann, and I'm one of the co-founders of Advanon. I'm originally from Sweden. So before working at Advanon, I did my bachelor's in Sweden in business administration, worked for a few years in research and consulting. Then I continued with my studies at HEC in Paris, and then I did an internship at Google, and that's where I met my two co-founders, Phil and Stein. And we all came with the will to start something by ourselves, and we thought the financial industry would be an interesting part to get into. We had different ideas about in what way we could actually help SMEs with their financing. And that's basically where it all took off. In the company, I'm responsible for the operations and the finance. And what we're doing concretely is we're doing invoice financing. So say that a small company has an invoice that is getting paid in 30 up to 90 days. Instead of waiting for that money to be paid by their customers, they can upload it to our platform and investors can finance it for them. So basically they get the cash directly, and in exchange they pay a fee to the investors. And next steps for the company is to right now continue our growth here in Switzerland and become the market leader in invoice financing. Then also our next step is to expand into Germany and establish a good position there. So we can also benefit of the German economy and the sheer size of it. And kind of the long-term goal that we have and vision we have is that money should flow to where and when it is needed the most. And the way we want to do this is to make it happen through efficient and very user-friendly technology. Because we were working at Google at the time, we looked at, okay, what are the needs that we actually have to fulfill here with our platform? And one of the needs is actually doing a proper credits assessment. And by having a shorter duration of the financing, basically 30 up to 90 days, we can verify that a company will actually repay the money quicker than what you can do in loan financing or equity financing, of course. So that basically gives us data to verify our credit risk models quicker. So we can build up high volumes of data relatively fast to crowd lenders. In general, banks in Switzerland don't do invoice financing. It's basically only one of the banks doing it now, and they focus on the very large companies. And the reason for that is due to the fact that invoice financing is quite a costly operation to do for banks. So doing it for SMEs is not really interesting because, the volumes that they finance don't generate enough revenues for them to actually do this. However, they do have clients that are actually looking for invoice financing. So we created a white-labeled version of our sell side of the platform, and we licensed this to banks. So the banks can offer our services to their clients, but under their brands. But as soon as an invoice is uploaded, it's actually uploaded to our platform. So we take care of all the operations in the background, and we finance the invoice through our investors that we have on our platform. So the bank basically doesn't have to do anything, but they still can offer service to their clients. So we said no to continuing working at Google, and we had to go back and finish our studies at university. So we started to work on this alongside of our last year of our master studies. So that was a bit of an intense thing to do, to kind of start a company at the same time while you're finishing up your studies. But it was good in a way as well, because we had kind of good time to figure out how the business model would look like. Then in February last year, we started the company. We started to build the platform. We started to build the legal infrastructure for the whole thing, get cleared by regulations, FinTech in Switzerland. And then we went live in August. And after we went live, the first couple of months was a bit difficult to get the first clients on board, which I find, pretty natural, I guess, in the financial industry, because there's a lot of trust going into this industry. But as soon as we started to get the first clients on board, things really started to take off. And when they realized that we're providing them with a good service, something that actually helps them to not only get cash on their account, but the use of the cash kind of to pay their suppliers or pay the salaries and so on, people started to realize what the value of the service actually was. And because we put a great emphasis on flexibility, we often tried to come up with a good solution for our clients. And then things started to take off. More and more clients joined the platform. And now all of a sudden we have quite a great growth rate. I would rather say there was a development of how the press kind of covered fintech. And instead of having fintech as just being something that is up and coming in the US or in the UK, it actually really started to take off in Switzerland. And kind of the more press coverage, I think all the firms got through the different newspapers and so on, then more and more companies actually started to actually trust and believe in these businesses that can actually bring some actual value to them. There's been multiple fintech companies around for quite a while here in Switzerland, but kind of the more and more people read about this in newspapers, I think it's really it really attributes to creating trust for the general public, and also more and more awareness of that there is solutions that are being used and that can be helpful and that are giving a different type of value than what traditional banks might give, for instance. Banks are contacting us, and we are also contacting banks, so it's mutual there. And it's for multiple reasons. It's either to be on one side of the platform, being, either investing in invoices, or it could be to kind of get our white labeling solution, or it could be making cash transactions, and so on and so forth. So I think banks come with different interests and see different opportunities when collaborating. Many companies in the fintech sphere, and that was also kind of how the general public saw it, was that, okay, now these fintech companies are here and they would like to kind of outcompete the banks over the next 10 years. Banking is going to be dead in 10 years. But I don't think that is the way to go. I think banks have been around for way too long for that to happen. The infrastructure is there, the relationship with their clients are there. So what you have to do in order to be successful on the market, both being a bank or being a fintech company, is to see where can your interest actually overlap and where can you find collaboration opportunities and see how you can kind of grow together. Many of the banks often have innovation departments, and they are really open-minded to actually bringing in new companies and exploring new possibilities of actually doing things. And they kind of quickly get what you're doing. But then as soon as things go from the innovation department to kind of the rest of the organization, things can get a bit more complicated. Some banks are really good at doing it. Some other banks are not really good at doing it, so to say. And then other parts of the banks might not really understand fully what it is that we're doing and what value that is bringing to our clients and to the bank itself. So, for instance, after getting our financial intermediary license from FINMA, which took quite some time to get, we thought that we would be able to open a bank account directly with the banks to handle our transactions through. But the problem was that after our long struggle with the FINMA, we had to kind of start with the struggle of the compliance department of the bank. And I can see why that is. They have to look over their own processes and make sure that they're compliant. But it was a bit frustrating to wait for another 4 months to open one single bank account. So kind of the base services, opening a bank account, handling cash transactions, and so on, are very difficult to actually get through with banks. While at the same time you're talking to their innovation department that says that we're going to conquer the world together. So it becomes a bit counterintuitive that, okay, on one side, we're trying to set up a partnership here, but on the other side, we're getting hindered for various reasons. Something that the banks could do better for fintech companies is to basically have their basic offering ready and kind of packaged for fintech companies, because that will clearly help them to not only get them as clients, but also to kind of get them committed to a potential partnership in that. When we started getting contact with Finma, things went a bit slow and so on, but that's pretty natural. We just started our company and was 2 or 3 months old. But then once we actually were able to open a line of communication with them, things actually went really smooth. Then I think in the general sense, when it comes to regulations right now in Switzerland, there's a lot of players that are blaming the regulators. And I don't think they deserve that because they're really trying hard. So sure, things have not been so easy from the beginning, but they're really improving right now, and they're open to communicate with the startups, so to say, and in the various fields. And what many actually do is that they kind of want to have a scapegoat, right? So they want to blame one player for this, and often it becomes the regulator. But it's not only the regulator; it's also the politicians setting the laws, for instance. So in crowd lending, you're not allowed to have more than 20 creditors, and that's not a problem with regulation; it's rather a problem with the law. So you have to look at all the different players that are actually affecting the whole space, which I think is the regulators, the politicians, the banks, and so on and so forth, and how all these can kind of work together on creating the space to something more fruitful for the startup, so to say. Why Switzerland? Well, we actually looked at different markets. The boring version is that we did a bit of a market analysis. We looked at where do we have competitors, where do we have potential clients, what is the size of the market, what other industries can we benefit of. And obviously there, Switzerland looked positive because the competitive landscape was rather limited. The size of the market is not the biggest. On the other hand, it's a strong financial industry, which obviously helps when creating partnerships, hiring people, or getting capital to be financing invoices. Then out of pure convenience, my two co-founders actually studied here, so that helped quite a lot. There's more capital on the market than ever. However, getting financing for SMEs is tougher than ever, which is a bit weird because the money never kind of trickles down from the corporates down to the SMEs. It kind of gets stuck up, but not on the corporates. So I think if the fintech market can actually solve this problem with getting the credit to the SMEs, I think the SME sector can actually benefit from that quite dramatically. And there are probably some sectors of the SMEs that will actually benefit from this and grow faster. Because they have more cash at hand and can make the investment necessary to actually grow their company. I wouldn't go so far to say that we'll solve all the problems with pensions and say that people will work less and so on and so forth. But I think, at least in our space, I think money will be able to flow easier between who actually needs it and so on. And I think that's an important element. So people will become more open-minded to actually financing maybe the business that you have around the block rather than just putting your money on the stock market. So when people become more and more open around this, I think it creates a different type of community where you're actually open to financing small and medium businesses and kind of the mom and pop shops around the corner. So I think there will be a shift probably in the way you look at getting financing, but also in kind of providing financing for and investing your money, so to say. What the fintech sphere is kind of doing, it's all about money to a certain degree. It's about either generating cash and interest and so on, or getting cash so you can do something else with the money. And if you can make that more efficient, well, sure, you might have higher economic growth, but in the end, I don't think it will be as revolutionary for our everyday life as, for instance, e-commerce was. Because that's a new way of shopping, and that's something that you enjoy doing. Dealing with your finances is not what most people actually do enjoy doing. It's something that you want to work. You want to have a solution with your bank or crowd lender, whatever that may be. So you do have the cash, you can actually do other things that you enjoy more or that your business is focused on. And if we can make that more efficient, well, in them what will actually happen is people can focus more on what they actually would like to do rather than looking at how to get financing, I think. At the moment, what we're seeing is early adopters using it, right? But the big impact that you will get is actually when the general public start adopting fintech's services. So our hopes is to, well, continue the growth that the overall market is having right now, but that we kind of start getting on to the greater masses of people actually start using these services. And that's where I think it will become really interesting, because not only the people will benefit from the services that are provided, but more focus on the industry will also generate more data, for instance, where you can start making more interesting products, for instance, or more accurate decisions on where you would like to take things. So that's really our hope, that the market will come to not only the early adopters, but kind of the greater masses, so to say.